Microsoft reported its highly anticipated quarterly financial results, and investors want to know what's going on with Microsoft stock that's causing the share price to increase meaningfully following the earnings release. Of course, I'm happy about the share price increasing. I've had Microsoft stock rated as a buy all year long here in 2025, as well as all year in 2024. So I've been bullish on this company for several years now. So let's take a look at the details that you need to know from the company's latest earnings call.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.
So Microsoft reported its cloud segment surpassed 168 billion in annual revenue, and that was up 23% from the same time last year. The company saying that the rate of innovation and speed of the fusion is unlike anything we have seen. To that end, we are building the most comprehensive suite of AI products and tech stack at massive scale. And interestingly, this is almost word for word the same thing that Alphabet said. They said something very similar to this, and I reviewed Alphabet's earnings call, if you remember, if you watched those videos late last week. And Alphabet was saying the same thing, that they are building the most comprehensive suite of AI products at massive scale, and they are innovating at record speed. And you can argue for either case, but what remains is that they're both innovating rapidly and building some really exciting AI products that consumers and businesses alike are adopting very quickly and rapidly. The statistics of customer usage, revenue, backlog, orders, you can, regardless of the metric you're using, those metrics are all improving significantly for both business use cases and consumer use cases. Its Azure cloud segment, which is comparable to Alphabet's cloud segment and Amazon's cloud segment, surpassed 75 billion in annual revenue, and that was up 34% year over year. Notably, Microsoft's cloud segment and Alphabet's cloud segment are growing much faster than Amazon's cloud segment, but Amazon is by far the largest cloud business across the board. But the two companies, Microsoft and Alphabet, are catching up quickly. Interestingly, Amazon is scheduled to report quarterly financial results after the stock markets close today, and I'm excited to review those results when they come out today. Of course, I'll have videos for you that are evaluating Amazon's results soon after they come out. Microsoft saying they opened new data centers across 6 continents and now have over 400 data centers across 70 regions, more than any other cloud provider. And this is the segment where most of the spending from large business is going to. Enterprise hyperscalers like Microsoft, Amazon, Alphabet, Meta platforms are all building these data centers optimized for artificial intelligence. And collectively, they will spend hundreds of billions of dollars this year across these categories and more next year. So whatever they spend this year, they're going to spend more next year. Already, Alphabet and Meta platforms reported quarterly financial results, and I reviewed their figures. I also reviewed Microsoft's figures. All three of them noted that they will be spending more money next year than they spent this year on these data centers optimized for AI, and they spent hundreds of billions of dollars this year. So this spending and the forecast for continued increases is partly why I've been so bullish on NVIDIA stock and AMD stock, because they sell the GPUs and other equipment that goes inside those data centers optimized for AI. And it was refreshing to see all three of these major hyperscalers that I've reviewed so far, all indicating that they will increase their spending on this category next year. Microsoft boasting that they continue to scale their own data center capacity faster than any other competitor. And here's the interesting thing with Microsoft is through software optimizations alone, they're delivering 90% more tokens for the same GPU compared to a year ago. That means they're utilizing their GPUs, their existing data center capacity, better this year than they were last year. So the same number of GPUs are now delivering 90% more tokens. And if you don't already know, a token is what they call an output from a large language model or an AI model. So let's say you search an AI model and ask for what's the healthiest breakfast to have for somebody that's trying to lose weight. And it gives you an answer. That answer they call a token. And so they're delivering more of those tokens per GPU compared to a year ago. And that's important because these large language models consume a lot more power than a traditional search engine result would. And so that means a higher cost base for each search query compared to what these companies were used to delivering 5 years ago or 4 years ago when all of our search queries were going to search engines instead of large language models. By the way, this document I'm reading from is Microsoft's Q4 2025 earnings call transcript. I've made this document available to all my channel members, and you can join my channel for less than $5 a month. And this is just one of the benefits you get. There's many more, and you can explore those by clicking the join button underneath this video or the button in the description below. Microsoft saying they saw accelerating growth from migrations again this quarter. Nestle, for example, migrated more than 200 SAP instances, 10,000 plus servers, and 1.2 petabytes of data to Azure with near zero disruption. That makes it one of the largest and most successful migrations in business history. Wow. One of the largest and most successful migrations in business history. So that trend is also continuing where businesses like Nestle are moving their cloud computing or are moving their computing, their IT from on-premise to the cloud. And the increasing effectiveness of artificial intelligence is accelerating this transition. If businesses were hesitant to move to the cloud before, the increasing effectiveness of AI is providing that impetus to create that switch. And businesses like Nestle and accelerating small businesses even more because small businesses don't have the large spending power to be able to host all of their IT in-house. And so they're renting from the cloud. And the reason why this makes sense for businesses is it moves a fixed expense into a variable expense. So instead of having to spend thousands and thousands of dollars upfront to build this IT, you can instead spread that across your usage needs over several years by paying a monthly amount to use these cloud computing services. You can either pay a monthly fee, a fixed monthly fee, or you can pay based on how much you consume, how much you use. And it makes it a lot more manageable for small businesses that don't have that large budget to in-house all of that IT infrastructure. So, exciting news here from Microsoft, and it was reassuring to see the AI category continue because this is what's fueling the growth of the stock market for the past 2 years is the increasing effectiveness of artificial intelligence, which is making every employee more productive, which is creating a increase in the amount of value provided to consumer search queries, which is increasing the usage of large language models because people see greater value in using large language models. So they're searching more, they're engaging more, and all of that is creating this positive virtuous cycle that's increasing profitability for businesses, which is then allowing them to spend more money in this category, and on it goes. So it was exciting to see that these trends continued despite macroeconomic headwinds as a result of tariffs that were announced earlier in the year. Hey everyone, so many of you have been asking about my investing strategy, and I'm excited to announce that I've written a book that's available for sale now that describes my 6-step investing framework for evaluating stocks. I've added the link in the description below.